All right, so in this lesson, we're going to talk about long-term management. In the previous one, I showed you what short-term management looks like, which is mainly just trailing that 1 hour 50 EMA with your stop loss and waiting for a trend change. And if that trend change happens, once the 1 hour 50 EMA is broken or a key trend line is broken, we exit, specifically on the 1 hour time frame. It's more snappier. It's a very good short-term management approach. And as you saw from the previous examples, that approach managed 6% return on this specific setup, right? Which is really good. It's mainly just targeting that daily run. So whenever you're targeting that higher time frame run, the daily run and so on, you can utilize a short-term management approach to get a really good return on your setups. Long-term management, very similar, a little bit different. Instead of the 1 hour 50 EMA, we're trailing the 4 hour 50 EMA. That is long-term management. Right? Same concept, enter on a trend change, exit on a trend change. But in the previous example, we're focusing on the 1 hour trend change. In this example, we're going to be focusing on the 4 hour trend change and the 4 hour 50 EMA break. And we're going to trail that 4 hour 50 EMA instead, right? With our stop loss. So I'm going to show you the same example just because it applies. And I want to show you the differences here. But this is extremely important because you have to decide what kind of trader you want to be, and in the beginning stages, it's all about experimenting, right, with different approaches, long-term, short-term, and so on, and eventually you'll know what you prefer. I prefer short-term management a lot of the times instead of long-term management, right, just because I'm more of a shorter-term trader, even though I still consider myself kind of in between day trading and swing trading. I still prefer to utilize short-term management to get out of those positions quicker and make money quicker. Right? But from a long-term management point of view, you can just get much more reward out of setups than a short-term management can. But again, that's more of a longer-term swing trading approach. So you've got to be willing to sit on positions for weeks and weeks and weeks sometimes to really have, when utilizing this long-term management approach. So that's it. I'm going to show you the exact same example. Let's have a look. So right here on the charts, right now we see the exact same example, pretty much where we left off in the previous lesson of short-term management. Guess what? This trade continued to go farther, right? If we look at this 1 hour time frame and I go to the 1 hour chart and I'll fast forward, check out what happened, right? You can see that as we broke out and we exited this position with short-term management, which was great for 6% profit, that's awesome, right? But we can see that if we fast forward, check it out. It fell right back down. It was a false breakout. So sometimes we get this. It's like a false breakout. It just breaks out slightly and then it falls right back down, right? That typically happens when the higher time frame trend is so strong. We might just get a small little break. It looks like a false breakout and then it just continues with a lower time frame trend and so on. So you can see here that it broke out and guess what? Started stalling at those lows. Right? And then eventually it started to accelerate back down, kept on going farther, right? So all of a sudden, right, we took profit for 6% here with short-term management, which again is amazing, but this continued to go farther. And guess what, right? When it continued to drop there the following day, that is when the profit target was hit. There we go. And you can see that right here again. We exited the position somewhere here for 6% profit, but as it started to fall, let me fast forward on this 4 hour time frame as well. As it started to fall, all of a sudden that profit target was hit for 9% profit, which is crazy, right? That would have been a really big trade to make 9% on one single position, right? But that's what happens when you have such beautiful higher time frames like we did in this case, right? Let me just fast forward on every single time frame here till that profit target was hit for 9% profit at the previous daily lows, which is right there, right? And the weekly 20 EMA, which is right here, target hit, right? The monthly chart ended up closing at this point with a big bearish candle like that, big bearish, beautiful high test. So guess what? Is there still more higher time frame momentum here? This is interesting because this setup started to develop. It was an advanced breakout that started to develop into something beautiful with big bearish engulfing reversals on the weekly time frame, a lot of acceleration on the weekly chart. Even though we're hitting the 20 EMA, and you can see that the 20 EMA has been holding as really good dynamic support and resistance here this entire time on the weekly chart. But look how much acceleration we have to the downside. Same thing on a daily chart. We broke down and started accelerating to the downside. The monthly chart developed this beautiful bearish hiatus reversal, again rejecting this key resistance area, right? So this trade from a higher time frame point of view is looking epic. It's looking really, really well. So this is when you can choose also to potentially use a longer term management approach if you're that type of a trader. And that will look something like this. So if we go back to the lower time frames, instead of trailing that 1 hour 50 EMA, right, we're going to take our stop loss, I'm going to delete it from this 1 hour chart, and we're going to put it to the 4 hour time frame. There it is, right? And it will be the same approach. Let's take it all the way to the top. Imagine you execute the position, right? You execute the trade, and once it clearly breaks that 4 hour 50 EMA, sometimes this was an IBO. If you're taking it as a CBO like it happened here, right? We had a CBO that occurred pretty much the next following day on a retest of the 1 hour 50 EMA and the 4 hour 50 EMA right there, right? And then it just started to fall. So in this case, we manage it a little bit later. So we keep our stop loss where it is at the highs, right? Until it clearly breaks that 4 hour 50 EMA and comes back to, and starts moving downwards. So once we get this break and retest at the 4 hour 50 EMA and then price action starts to move downwards, at that point, take your stop loss and lock in profit or remove risk at this point. At this point, remove risk, right? As soon as you can. You still want to be, in this case, protected by the 4 hour 50 EMA. And you do this because you don't want to just enter it really, really quick in and out. You maybe want to target, guess what? The weekly 50 EMA instead. You want to push it further, or you just want to stretch it as far as possible. But let's say we have a target at the weekly 50 EMA, this next daily support level at 1.36. So if we take this position, same entry, it will be the same entry, but instead of 1.38 as the target, 1.36 as the target, and that's almost 13% profit, 12.65, right? So let's see what happened here. So in this case, as it comes back to give us this break and retest of the 4 hour 50 EMA, the CBO, we take our stop loss at that point once it starts moving downwards, and we remove our risk, right? In this case, the IBO. If the entry happened as a CBO, again, we remove our risk once this 4 hour 50 EMA moves down. Think of it. Just like with short-term management, we always want to have our stop loss protected by the 1 hour 50 EMA. With long-term management, we always want to have our stop loss protected by the 4 hour 50 EMA. We don't want to choke the position. Choking the position means that our stop loss, we move our stop loss too tight, too close to that 50 EMA, and we can just get a high test reversal and get stopped out for no reason. That is choking the position. We do not want to do that. So we still want to keep it well protected above, in this case above, if we're trading in the opposite direction, below the 50 EMA with really good distance, right? So once it starts falling to the downside here on a 4 hour chart, again, we take our stop loss and we just keep on moving it down. And this is something that you can do daily, every single day, once a day, just move the stop loss down as price action is moving down, right? And you're just trailing that 4 hour 50 EMA all the time. So in this case, we already get stopped out on a 1 hour time frame for 6% profit. It was roughly right here. Our stop loss would have been all the way up there. So it still would have been higher, right, than where our 1 hour 50 EMA stop loss was, obviously. You know, just because the 4 hour 50 EMA is higher than the 1 hour 50 EMA just makes sense, right? But let's change our profit target to 1.36 here as well, which is again the weekly 50. And let's see how far that is, right? So 1.36 is all the way down there, right? So let's see how that develops. In this case, we don't need the 1 hour 50, this 1 hour trend line anymore, because that's not what we're using for our management, right? We were with short term, but in this case, this is more of a longer term approach. So we don't really need that management. You can see 1.36 profit target was hit here, right? And if we fast forward on this 4-hour time frame, look, it just continued to fall down. Check it out. Let's see if it ever pulled back to that 4-hour 50 EMA. So in this case, look at the distance between the 4-hour 50 and the stop loss. We can move it down a little bit right now, right? So always just, whenever you notice the distance being too wide, just move the stop loss down and always lock in profit. So check it out on a 4-hour chart. Again, on a 5-minute time frame, you can already see that the profit target was hit. But let's see how this plays out on a 4-hour chart using long-term management. And there it is, moved farther down, accelerating to the downside, so we can take our stop loss again and move it farther down as that is developing. And let's go farther here on this 4-hour chart, and boom, profit target hit. So if we utilize long-term management, right, our initial target of 9% would have been hit easily the following day, right? But also we would have had we still don't have to exit this position. If we pushed it farther from a longer term swing trade point of view, targeting that weekly 50 EMA, because I mean, this is an ABO on a higher time frame, and ABO on a lower time frame, you target the 4-hour 50 middle time frame. So imagine the monthly here is the daily, right? The weekly in this case is the 4-hour, and the daily is the 1-hour. This is an ABO on a higher time frame. It's monthly, weekly, daily. The middle time frame is the weekly chart, so weekly 50 EMA could be the target. And that's exactly what got hit right here at 1.36 for 13%, just under 13%. But let's see, right? What if you saw this as such a beautiful, because let's fast forward here on the weekly chart. There it is, profit target got hit, right? Fast forward on a daily chart, boom, profit target got hit. Fast forward on this monthly chart, there it is, profit target got hit. Beautiful, just fell massively to the downside. And this doesn't always happen, but it happens once in a while, right? Whenever we have beautiful higher time frames like this, we need to know how to manage them. That's why you got to pick one option, whether it's short term, long term, and so on, right? You just need to pick it and stick to it. So in this case, long-term management played out beautifully. That profit target at the weekly 50 EMA got hit, but guess what? There's so much potential here on the monthly chart. So maybe if you're even a longer term trader, right, you might even just set your target at, who knows, the monthly lows, right? And you might hold this for a year, and you have to expect that. But let's say you put your target at 1.3, just because, and you're going to use long-term management, right? Chances are 1.3 target would not be hit, right? With long-term management, you would have to manage it a little bit differently. Actually, this is 1.223, my bad. 1.23. Let's adjust that. That would be a massive return if that profit target got actually hit, 36%, right? But let's see, let's check it out, right? So what happens? Let's just continue following this 4-hour 50, right? Until the 4-hour 50 EMA is broken, right? So let's just keep on pushing. Let's keep on pushing. So this is the initial target right there at the weekly 50. Got hit for 13%. Let's push it farther. Let's just keep on going on this 4-hour time frame and see what happens. Right, so at this point, the 4-hour chart, 4-hour 50 is moving down. So again, we take our stop loss, we move it a little bit farther down, and don't pay attention to the 1-hour chart at this point. Just watch the 4-hour, just because the 1-hour chart is delayed. We'll fast forward on the 1-hour chart later. But check it out. Now it's going farther down. It broke that 1.36 level. Actually, it looks like it's stalling on it, decelerating. But let's see what happens. So check it out. We're right here, right, when I made the jump, and it just came back to retest that 4-hour 50 EMA right here, and never rejected the 4-hour, it never broke the 4-hour 50 EMA, right? They just literally gave a tweezer top rejecting that 4-hour 50 EMA. Let me remove this profit target at this point, right? So it just gave a tweezer top rejecting that 4-hour 50, and it continued to go farther down. So let's continue move that stop loss until we have a clear, we're always looking for a clear breakout off of that 4-hour 50 MA. And that was right here, right? So the clear break happened right here, and either your stop loss would have been hit, or you could have exited the position right here when it started to break out. So how much profit would have that been? That would have been 1.34 roughly, right? Exit at 1.34. So if we take that to 1.34, that's 16%, right? A massive 16% return utilizing long-term management. And again, I just want to say this doesn't happen too often. In trades like this, you might catch a couple of them a year, right? Maybe a few more for such massive return. But again, if that's what you focus on, and if long-term management is your thing, right, then you can expect big returns like that, right? Otherwise, you might prefer short-term management because you're much more snappier and so on, right? So, but you can see the difference. Short-term management ended up with 6% profit. Long-term management, trailing that 4-hour 50 MA instead, could have ended up both ways, two ways. One, you had your target at the weekly 50 MA. Simple, right? It was an ABO, weekly 50 is a good target level, decent support on a daily chart. So you could have just had your target there. That would have been 13% profit with long-term management. Short-term management gave us an early exit for 6%, right? So the next target was 13% at this weekly 50 MA. Well, if you decided to take this further, even more long-term down to the monthly lows, right, then you would have made about 16% with long-term management, because that is when the 4-hour 50 MA was actually broken, right? And that was broken for just about 16% return, which is epic. It's really, really, really good. Let me jump on this 1-hour chart. Here we go. So this is exactly where we started to break out on the 1-hour time frame. Let's make this nice and cleaner from the entry. Look how far this went, right? So you can see that the 1-hour time frame, the 1-hour 50 MA was broken multiple times, right? Multiple times. In this case, it broke the 1-hour 50 MA here, but that was only a bounce off of the 4-hour 50. You can see that clearly, right? The 1-hour 50 MA was being broken again, but that was only bouncing off of the 4-hour 50 MA, right? And then it continued farther and farther. But during that time, the 1-hour 50 MA was broken multiple times, right? Whereas the 4-hour 50 MA was not, until finally right here, a few months later. This is now June, right? June 4th. Let's see on the higher time frames how this played out, right? So fast forward on a monthly chart. Actually, yeah, let's fast forward on the monthly for now, all the way to June. So right now we're on May. Yeah, this is May. And it was until the next month. So this position as a long-term management, if you actually ended up pushing it longer term, this would have ended up right here, lasting about 1.5 months, right? So you gotta expect to hold positions for that long. Let's fast forward the daily chart to 1.34 to June, right? So you can see it started stalling there. And this is where the 1-hour 50 MA was broken multiple times, but it only right here came back to retest and reject that 4-hour 50. So it was here, it was stalling, it was consolidating, but then it ended up going further down. And there it is, you know, June hit. Actually, June was still a little bit later. There we go. June hit, and this is when the 4-hour 50 MA was finally broken. And on the weekly chart, it's ended up looking roughly the same. But it broke. In this case, it broke the weekly 50 just slightly. There we go. You know, and this is again roughly where we are. So this is what the higher time frames look like. But check this out. See, if you look at the monthly time frame, it's still accelerating to the downside heavily. We just started this monthly run, right? So there's another way to manage it. This is just going to be something extra that I add for you guys. But the 4-hour 50 MA management is already really, really good. Same thing with short-term management is already really, really good. But if you really want to be a longer-term swing trader and you want to target this monthly low at 1.33, something that you can obviously do is once this position starts developing, right, you can manage it based on the daily 50 MA. And that could also be obviously kind of a longer-term management approach, right, where you're trailing that daily 50 instead. But this is, just know that this isn't something that I necessarily do because I'm not that long-term unless this is an investment. This, to me, it would be more from an active investment point of view, right? And at that point, yes, if this is a long-term active investment, meaning that I'm holding for months, right? And I'm expecting to hold for months because of the beautiful higher timeframes that developed here, which chances are if you're holding down to the lows, this is a really good continuation on the monthly chart. Chances are it could get down to those lows. You gotta expect to hold it for a few months, maybe even a year. That's more of an investment, right? Long-term investment. And the way you can manage those types of long-term trades is trail the daily 50 MA instead, right? And just let it fall. So let's see, let's check it out. Does it even hit the monthly 50? That's what I'm curious. Does it even hit the monthly 50? So I'm gonna jump ahead here right now and check it out. The monthly 50 MA was hit. That would have been a big return. That would have been exactly, check it out, or not the monthly 50, the monthly lows, but it would have been exactly at roughly 36% return right here at 1.23, right? So it was hit. So if we managed it based on the daily 50 MA, let's see how that played out. I'm gonna fast forward. And you can see here on a daily time frame that if you managed by long term by trailing that daily 50 MA, you would have been exiting the position right here at 1.31, which would have been a little bit different, right? The previous exit was at 1.34. At 1.31, we will be looking at 21% profit, right? Now you can obviously take this even longer term, even farther long term, and if you're like a long-term investor and trail the weekly 50, just like imagine this, what we did here on the daily chart right now. This is like a short-term management on the higher time frames, right? Literally trailing the daily 50 MA, just like we trail the 1 hour 50 MA. If we want to apply the long-term management to the higher time frames, right? Obviously you can trail it a little bit farther. And again, this is just a little bit bonus for this lesson. Let me jump ahead on a weekly chart, see how this played out. Boom, and check it out, right? So the weekly 50 MA was broken at the exact same level, right? Right there at the exact same area, but later, right? So it was broken exactly right here, a year, 10 months later or so, which you see, in this case, you would have held the position from September, right? If you utilize the long-term approach on a higher time frames, trailing the weekly 50 MA instead. The difference between short-term and long-term would be, there would be no difference. It would be the exact same profit return, right? But short-term profit, you would have exited in September. Long-term management, you would have exited in January the following year, right? For the exact same profit. So, you know, that is just kind of the difference of how you can utilize, if you're a long-term investor, how you can utilize short-term management on a daily chart. Same thing. Instead of trailing the 1 hour 50 MA, you're trailing the daily 50 MA. Long-term management would be, again, instead of trailing the 4 hour 50 MA, you're trailing the weekly 50 MA. So that is it. That is it for this lesson. That is it for long-term management. Long-term management, from my point of view, and how we literally mainly use Trade MasterClass is mainly going to be applied to the 4 hour chart, right? Long-term management is mainly going to be applied to the 4 hour chart. And as we saw, is you're just mainly trailing that 4 hour 50 MA till you get a trend reversal on the 4 hour chart and that 4 hour 50 MA is broken. At that point you exit. That's the difference between short-term management and long-term. Short-term is you're trailing the 1 hour 50 MA. Long-term is you're trailing the 4 hour 50 MA instead. Now, the bonus here is that you can take those management approach and apply them to the higher time frame. Short-term management on a higher time frame is trailing the daily 50 MA. Long-term management on a higher time frame is trailing the weekly 50 MA. But when you're doing that, you gotta expect to hold positions for months, maybe even years, which turns to be more of an investment style. So there's a few different approaches here. Day trader, utilizing short-term management on the 1 hour chart. Swing trader, right? Utilizing either short-term management on the 1 hour chart, or if you a little bit more of a longer-term swing trader, long-term management on the 4 hour chart, right? And obviously, if you're an investor, you can take those two management approaches and apply them to the higher time frames. Short-term management on a daily chart, long-term management on the weekly chart instead, right? So that is it. I want to say that it's very easy to have FOMO, fear of missing out, when you utilize a short-term management approach and it just continues to go in your favor farther and farther and farther down, right? Initially, this position exited for 6%. If using short-term management on the 1 hour chart, if we utilize some of the other management approaches, we could have got 13%, 20%, and so on. But you got to stick to your personality. So a lot of times, from a beginner point of view, short-term management is preferred, right? It's just easy, it's quick, you're in and out, you're making money quickly instead of holding positions for months, right? From a beginner point of view, that might be something that you prefer. Even if you've been trading for years and years and years, like myself, I still prefer short-term management on the lower time frames, right? And once in a while, I'll use long-term management on lower time frames. And only from an investment point of view, I will use those management approaches on the higher time frame. But that's a long-term investment, right? I know that I'm going to be holding that stock or that currency for literally years. And at that point, I'll apply it to the long-term management. I'll apply the short-term and long-term management to the higher time frames. That's what I mean. So you really need to decide what personality you are. From a beginner point of view, short-term on a lower time frame is great, or long-term on a lower time frame, meaning trailing the 4-hour 50 EMA instead, like I explained here. So that is it for this lesson. I give you guys a little bit of a bonus here for investments, mainly long-term investments, just so you know how to manage those if you have long-term investments and so on. That's an extra bonus. But mainly here is the long-term management is trailing the 4-hour 50 EMA and looking for the 4-hour trend change with the 4-hour 50 EMA break. That is it for this lesson. I'll see you in the next one.